What you saying, people? Back with a bang. This is the Money Management, and in today's video we're going to be talking about the stock market. Now, as you guys know, this is a channel where we talk about stocks, making money, how to live your life, financial advice, all those kind of things. But in today's video, specifically, we're going to be talking about the stock market because recently, as you may have seen, you may have heard, the stock market has been going up, 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 and then dipping, having a red day. It's going up, 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 and then another drops. So in today's video, I just want to explain to you guys 5 different mistakes which beginners make in the stock market. Now, this is for those of you who are already invested in the stock market, those of you who are new to the stock market, those of you who have maybe been in the stock market for maybe a year or two. It doesn't matter. These beginner mistakes you need to avoid, and trust me, they're going to be worth it. I've been in the stock market just over 2 years now, and I've done a few of these mistakes. I've also seen some of these mistakes, and they're quite costly. You need to make sure that when you invest in the stock market, you put your hard-earned money into stuff that stuff that's going to bring you back more money, and you know how to control it. So, to start off with, the first beginner mistake that people make in the stock market is unrealistic expectations. So what do I mean by this? Well, let's say, let's talk from my experience. I started investing in the stock market. My very first day, I get a 24% gain. That is on my overall account. So I'm thinking there, wow, I know what I'm doing. I'm good at this game. But that is not the case. You might call it beginner's luck. You might call it me doing my research and just getting lucky at the beginning. But it doesn't matter. Just because I got a 24% return in one day, on my first day in the stock market, didn't actually mean anything. So I had unrealistic expectations going forward, and many people have the same. This is not just for those of you who make gains in the stock market, but those of you who lose money. People, get discouraged because they lost a few bucks in the market. People get discouraged because they started for a month and they've lost, 10% of their account. It doesn't matter. You shouldn't have unrealistic expectations when you invest in the stock market. No matter whether your money goes up the first day, down the first day, you're up 25% on your account in the first week, you're down 40% on your account in the first month. Don't worry. That is obviously a part of the learning. That's a part of the process. A lot of different things can happen when you're new to the market. So don't have unrealistic expectations. We're all going to go through this period of time where we're a bit unsure about what's going on with the market. It might do stuff that you didn't expect it to do. No one can really predict the stock market. So, patterns, sometimes they don't repeat themselves. You can lose your money. You can gain money. Lots of different things can happen. But it's important to make sure you don't have any unrealistic expectations when it comes to how you invest in your stocks. The second thing that is a huge mistake for beginners, listen to other people. Now, people will tell you, invest in this, invest in that. I want to tell you, don't invest in what you don't know. People may tell you to invest in all sorts of stuff. People you might not even know might be spreading news on the internet, writing blogs, sending you links to stuff where, they say this stock is going to go up next Tuesday, this stock is going to do this. And you go and invest in it because you listen to other people's opinions. Don't listen to other people's opinions. Do your own research because it's your own hard-earned money that you're putting into the stocks. People can always tell you, oh, American Airlines stock is going to go bust. American Airlines stock is going to go up. It's going to get you, 10 times your money in the next year. People can say all sorts of stuff. So again, I'm telling you, you don't need to listen to other people. This is a huge mistake when it comes to beginners in the stock market because they hear that other people are saying this, other people are saying that, so they should do this, they should do that, they should short this, they should put options on this, they should make money by doing this. Trust me, that's one I've done before. Listen to other people without doing my own research, and it's going to hurt you in the long run. You might get lucky with a few trades, here and there because someone did know what they were talking about, but you're going to come across that person who didn't know what you're talking about, you're going to put a lot of money into something, and you're going to lose that money. So don't just blindly listen to other people's opinions. The third biggest mistake people make in the stock market, commission-based trades. Of course, you're new to the stock market, you want to put your money in everything, you want to try this, try that. If you're investing on an account, you're investing on a platform where there's commission for your trades, there's no point in you spending, $40 on a stock when, it's going to cost you $3 for that trade. If you're going to buy, a large amount of stock, let's say you buy a quantity of 10 stocks for, a stock which is worth $800. That's okay, but I'm going to tell you again, you're going to get commissions charged on it. A lot of people get discouraged because, they get heavy commission charges. It's like, all right, I'm paying already, 4% on this stock, and I'm going to have to make, 8 to 10% return? You think you're not going to be left over with a lot, and I understand that. That's completely normal. So what I would advise you to do is find those accounts with a lot lower commissions. If you need to use accounts like Robinhood, where there's actually no commission, and by the way, there's a link in the description for you to get to Robinhood if you're new around here. But those are the kind of places you need to be looking at. The accounts with, large commissions, you don't want to be doing active trades constantly. Leave your money in the market, and remember that, no matter what you do, as long as you trade, responsibly, you should be getting a return on your investment. But if you don't trade responsibly and you're paying commissions on top of that, it can scare you out of the market, it can damage your account, it can damage your perception of the stock market. It's not good to do that. So just watch how you trade. Just watch those commissions that you trade, and if you need to, paper trade or use accounts where you don't have high commissions. Trust me, those dollars that you pay for commission, they're gonna hurt you. If you don't know what you're doing, they're gonna hurt you even more. So make sure you don't do that. The fourth big mistake from beginners in the stock market: believing the hype. Now this is different to point number 2. Point number 2 was, listen to other people's opinions. It's not always hype. But this point here is about the hype. When the stock market's up, there's days when the stock market's up 10%, the Dow is up, the S&P is up. Go and invest, put your money in now. Tesla is, $900. It's going to a 1,500 by next week. That's the hype I'm talking about. I've done it before when it comes to pharmaceutical stocks, and those are the worst to do. You listen to other people, but you also believe in the hype. The stock market is green now, so now's the best time to invest. Well, hold on. When the stock market was down in 2009 and you were seeing it bottom out, wasn't that the best time to invest because you saw more potential gains? It doesn't make sense to me when the stock market's up and people start getting excited. They say, yeah, I'm going to invest in this, I'm going to invest in that. Facebook was $160 last week. Now it's $215. I'm going to put my money into it now. Well, hasn't it already seen most of the growth that's going to see? Hasn't it already seen most of the potential returns? You've got to understand that you need to know when you're going into a stock, why you're going into a stock, and how long you're going into it for. Remember, it's your time in the market that counts, not you timing the market. It's unbelievably difficult to time the market. And just take it from me when I say this. Don't try and time the market. Don't believe the hype. When stocks are up, it's good that you buy high and sell higher. That's fine. But if you're buying high and you don't really know what you're doing, trust me, that stock can dip, it can play with your emotions, it can damage you. Just don't bother believing the hype. People are always going to shout, get this, get that. The stock market's up, like I said. Don't believe the hype. Do your research and focus on what you want to do. You've got a plan, so make sure that plan works for you, because what you may see as, a good return might not be enough for someone else. What they might see as a good return might be too much for you or not what you're trying to do. It's up to you. It's your money again. So focus on your opinion. The fifth and final mistake for beginners in the stock market: penny stocks, investing in penny stocks. I've done this mistake. Other people have done this mistake. This is one of the most common mistakes. Investing in those penny stocks. You know why? Because you can come across a lot of pump and dumps. What are those? Well, you see stocks which are, 25 cents, 30 cents, and investors can, change how quickly the stock goes up and just how far it goes up by just putting in a few thousand into it. Just by that, the stock might rise, 20%, 30%, 40% in a day, and you get excited. You start thinking it's going to double your money. You leave your money in there. What do? Again, they spread news. They say it's going to go this, it's going to do that. They make sure people are talking about it. They get them their money, they're riding it out, and they slowly start, selling it off. Meanwhile, you don't know. You've got all your money in there. You're like excited. This penny stock is 30 cents. It's going to be $1 next week. Guess what? Before you know it, it's dropping. It's dropping. You're like, oh, it's going to go back up. I'm not taking my money out. Before you know it, you're at a loss. You're like, okay, I'm not going to take my money out because then I'll lose my money. You didn't cut your profits when you were there. You're now refusing to cut your losses while you're losing money. Where's it going to go to next? You don't know. Trust me, I'm speaking from my experience. With penny stocks, I've lost 50%, 60% of my money within a few days. Again, there are people who have loads of money in the stock market, loads of money in those penny stocks. You don't see people get rich long term from penny stocks. Sure, they might make a quick buck, short term, a month, a few weeks, but long term, a year, 2 years, 5 years, you never see that kind of stuff. Those people that own the penny stocks, those companies that have penny stocks, they can say whatever they want. They can say whatever they want about how much money they're bringing in, how much money they expect to get to. There's so much going on with them. So when it comes to you and investing, if you're a beginner in the stock market, do not invest in penny stocks. I'm going to tell you again, stay away from penny stocks. You might make a quick buck, in the first few days. You might make a quick buck in your first week, but eventually it's going to come crashing down and you're going to be hurt by it. You don't want to get discouraged from investing in the stock market. You don't want to lose faith in the stock market because, again, this can make you a lot of money in the long run. Penny stocks is something that will not make you a lot of money in the long run. Focus on what you want to do. Focus on those blue chip stock companies. Focus on the companies where there's actually potential growth. Focus on real companies where you can see returns. You guys work hard for your money. You guys put in a lot of hours, a lot of effort for your money. I know that for a fact. So when you got your money, avoid doing these beginner mistakes in the stock market because, trust me, as you learn to invest in the stock market and put your money into stocks, you're going to get better and better returns. Again, it's your time in the market. You spend 10 years in the market, 15 years in the market, 20 years in the market, you'll see good returns. You'll see great gain. You'll see your account grow. But if you're trying to invest quickly, listen to other people, getting involved in the hype, not doing your research, you'll lose money quickly. Everyone's going to say this or that. Everyone's going to tell you to invest in this, invest in that. People have messaged me to ask me what I would invest in. I've told them, I'm not going to tell you what to invest in. For some people, I've even ignored them because, when it comes to what you want to invest in, again, it's up to you. You might think that getting a 20% return on Apple stock is good enough for you in a year. Someone else might think 20% in a year is unbelievable. They might cut their profits at 10%. Someone else might be looking to get, a 30% gain, a 40% gain over a 10-year period. Everyone has completely different plans when it comes to stocks and different reasons why. So when it comes to the stock market, don't think that you're going to get rich quick by, throwing a few hundred in there and coming out with 500k. It's not going to work like that. Be smart with your money, be clever with your money. Don't try and time the market, but spend a lot of time in the market. But if you avoid these beginner mistakes, trust me, you're on the right path to succeeding when it comes to investing in the stock market. You will hear a lot of people saying, you can't beat the market, you can't get better returns in the market, this and that. Put your money in mutual funds, put your money in index funds. That's fine. A lot of those things may be true, but if you're smart, you use your head, you stay calm, you'll be successful when it comes to investing in stocks. Again, like I said, check that link in the description. There's a link to Robinhood. We'll both get a free stock if you're trying to get new to trading. And also, like I said, no commission. So for those of you who are beginners in the stock market, this is a perfect opportunity for you. Added to that, we've got other links in the description. We've got cryptocurrencies there. We've got affiliate marketing there. We've got a free guide to online business there. And also we've got my socials. Lastly, we've got time your watches, so make sure you guys check that out. That's my smartwatch brand. But overall, I hope you guys enjoyed today's video. As always, leave a like, subscribe, comment, share, all the good stuff. But that's today's video, guys. Thanks a lot for watching. I've got money making. You've got money making. See you guys tomorrow for another video. Peace.